Stop everything you're doing right now. Take out a dollar bill from your wallet. Look at it. This piece of paper, this symbol of your hard-earned labor, is about to undergo a transformation so profound it will redefine your relationship with money, privacy, and even freedom. You might be hearing whispers about digital dollars or CBDCs, Central Bank Digital Currencies. But what the mainstream media isn't telling you is the true cost of this innovation for your personal finances and your autonomy. We're told CBDCs will make transactions faster, cheaper, more efficient. But what if the real goal isn't just convenience? What if the very architecture of these digital currencies is designed to give unprecedented control to central authorities, making every single one of your financial decisions transparent, traceable, and potentially programmable? What if the future of money is actually the end of financial privacy as we know it?
To understand this, we need to peel back the layers, beyond the headlines. Central banks argue CBDCs will combat illicit finance, improve monetary policy transmission, and foster financial inclusion. They paint a picture of a seamless, cashless society. But let's look deeper. For whom is this efficiency truly beneficial? Is it for the individual, who already has instant payment apps, or for the state, which gains a granular view of every transaction, every purchase, every donation? This isn't just about speed. It's about data. And in the 21st century, data is power. The US dollar's hegemony is under threat. Nations are seeking alternatives to the SWIFT system, and China is aggressively pushing its digital yuan. A US CBDC is often framed as a defensive move to maintain the dollar's global dominance. But consider the implications. If the US adopts a CBDC, it sets a precedent. It legitimizes a system where financial transactions can be monitored and potentially controlled by governments. This isn't just about competing with China. It's about fundamentally altering the global financial architecture, potentially paving the way for a world where financial sanctions become even more potent and individual economic sovereignty becomes a relic. This is where it gets truly unsettling. Unlike physical cash, a CBDC is digital code. This means it can be programmed. Imagine a world where your money could expire if not spent by a certain date, or be restricted from purchasing certain goods or services deemed undesirable by the state. Imagine a social credit system, not just in China, but potentially here, where your access to funds is tied to your behavior. This isn't science fiction. The technology exists. The question is, will we allow it to be implemented?
Let's analyze the incentives. For central banks, a CBDC offers unparalleled control over the money supply and economic stimulus. For governments, it provides a powerful tool for surveillance and enforcement, potentially eliminating the black market and tax evasion. For commercial banks, it could mean a shift in their role, or even disintermediation. But what about the individual? What are your incentives? To maintain privacy? To have unrestricted access to your own wealth? The game theory here is stark. The state gains immense power, while the individual risks losing fundamental freedoms. The experts on TV will tell you this is progress. I tell you, it's a strategic move in a much larger game. History offers a chilling parallel. Empires throughout time have sought to centralize power, often through control of currency. From the Roman emperors debasing coinage to the British Empire's control over global trade routes, the ability to dictate the flow of money has always been a cornerstone of imperial power. When that power becomes absolute, individual liberties often erode. We are witnessing a potential shift from a system where money is a bearer instrument, meaning whoever holds it owns it, to a system where money is a liability of the central bank, subject to its rules. This is not merely an evolution. It's a revolution in the very nature of money, with echoes of past attempts to control populations through their economic lifelines.
So what does this mean for your retirement savings, for the cost of your groceries, for your ability to make anonymous donations or purchase what you deem necessary without oversight. If your money becomes programmable, your spending habits become transparent. If your financial privacy is eroded, your economic freedom is compromised. This isn't some distant geopolitical conflict. This is coming to your bank account, to your kitchen table, to your family's future. The silent collapse of financial privacy will have very real, very tangible consequences for your purchasing power and your autonomy. The narrative you're being fed about CBDCs is incomplete at best. It's a story of convenience, masking a deeper agenda of control. The unipolar world is indeed ending, and with it, the old financial order. But the new order being proposed through digital currencies carries risks that demand our urgent attention. Understanding these structural shifts, these incentives, and these historical parallels is no longer an academic exercise. It's a matter of personal and financial survival.